Oh God, I'm so sorry. Amanda said she couldn't hear me. Someone in the chat room can't either, so I apologize. I did have that on that, so didn't have the audio. So I'm glad that Amanda did want to mention that. So apologies there. And hang on. Thank you, Amanda, for letting me know that. Let's go on and move on here. We've mentioned on the euro. One of the key things with the euro that we found on here was that we started going to slip on fears of a recession coming into Germany. And the concerns was on the German GDP will attract more attention than usual because the concerns are that this last quarter may have gone into a technical recession here with the euro. Moving on, let's go back in here on the morning beat that I mentioned. I do apologize for the audio not being on. Or the speaker being, the mic being off, was that they're looking at when it comes to the sterling today. The thought is that the expectations are so low that anything less than 100-seat loss would be considered beneficial. So just touch on this real quickly before we move into the analysis. No signs is yet to emerge of the sea change in Parliament that PM Theresa May would need to secure victory on our Brexit plan sometime after 7 p.m. And that suggests that most of the suspense will be around the scale of defeat, and that implies for her next steps, expectations are so low that a margin of less than 100 seats would be considered a respectable outcome. Now, as they were mentioning, I'll quickly just move on this. It says a comprehensive defeat and the terrain becomes even murkier. May could come under pressure from business and others to state categorically that a no Brexit deal is not an option. The concerns are also with the Northern Irish DUP. It says, furthermore, there was a little bit of a touch here on Emmanuel Macron's turning anger into solutions, his whole deal with the yellow vests. And what we were leading to earlier was that it's just another concern for the euro. And lastly, it says Germany releases the estimates of GDP growth for the year this morning, for the last year this morning, with many fearing bad news. And essentially, they're looking for is the possibility that we've gone into a technical recession in the last quarter. One of the things I was referencing here on the euro is just another bit of bad news. And I think that at this point, and I was when the audio was down, so I apologize for that, is that last weekend we came so close for this breakout here. Everything looked like everything was ready for the euro to move higher, and we got that disappointing move. And I think that at this point, and what I was mentioning when the show came on, is that we're here at that 1470, which is our breakout. But after what happened last week, with this disappointing move and then breakdown, is that I think at this point, bulls feel like, fooled me once, fooled me twice, you're not going to fool me again. And really, it's opened the door for the euro to eventually move lower here in light of what had happened. And so any news, although the possibility of Germany going into a technical recession on the last quarter certainly isn't mild news, but it opens the door for the euro to go on and push lower. And I think that at this point now, I think bulls, the only way we're going to move higher is if euro bulls are drag kicking and screaming to the upside, because there are certainly a lot of doubters in light of that, in light of the technical action. It really opens the door, as I mentioned before, for this challenge down to 1422. We're going to move into the, and we mentioned earlier here, was that gold, it moved higher than the story mentioned about the catalyst for us to go on and move higher. Let me see. Okay, Stelly was saying he can hear me. Yeah, there was a problem. The mic, the mute was set on. But as we mentioned here about gold earlier, it did go on and move higher. And one of the things that we talked about in the Asian analysis, or the analysis from yesterday morning, and we'll reference here on the gold, was that the door was still open for it to move higher, but we needed that catalyst. And that catalyst, as we mentioned in the analysis, was either to be a dollar moving lower, or the case with the equities moving much lower. We started to get that initially on the open with the equities yesterday. Gold went up back here and started to challenge that area here, but ultimately We started to see a pair back. Gold has since pulled back a bit here. Once again, it's going to take a bigger catalyst, and in light of what's happening with the Brexit vote, we're certainly not getting that catalyst from that. We're actually starting to see, if you take a look at it, look, the dollar's starting to rip a little bit higher here. Euro's moved down to 14.33 now. So we are certainly starting to go in and push lower here with that. We've actually come into a little bit of support here. If we go back to our analysis, and we're looking for a challenge of 14.22, and we're just about there. Last week, a disappointing failed breakout for the bulls has left the market tethering at the breakout level of 14.70. Euro is now vulnerable to a challenge of 14.22, which confluences with 14.34, which is the 38%. So let's move into the euro right now, and look, we've taken that good little dip. 14.34 is the 38% here in the euro on that pullback. We're seeing that move right now. And potentially a move to 14.22. We'll pull this back. There we go. So we're right there at the 38%, and we are looking for potentially a challenge down here too, with that Asian analysis. Down to 14.22. So although we are at the 38%, you can see here this 14.22, I believe, is going to work more like a magnet here. And one of the things we're talking about as we came on with the show, and now we're getting the concerns with Germany potentially sliding into a technical recession in the last quarter. This failed breakout from last week really has put the market on the glass half empty. So we'll move into our analysis right now. We had 14.35 already, and that's exactly what we've come to today. Now, that's from yesterday. We're going to go with this 14.22, 14.35, actually 34 is at 38%. But this is what we're looking at right now for the support coming in here, 14.22. Obviously, some people may even have their eyes peeled on this 14.16 on a bit of a stretch. But we've got 14.22. But 14.16 is that 2-hour support coming in. So we'll go with 14.22 is the daily support close. We may be able to push it even a little bit lower than that right now as they're pushing the stops. Look for additional support here at 14.16. 14.22, as we mentioned, is daily support. Let's go in and take a look on the resistance now. At this point, it's going to be 14.78, actually 14.79 for resistance here. So let's. This will be key right here, the 14.22 on daily close support. So we may want to try and push a little bit lower here, but the market is really certainly worried in the glass. Let's see, we're putting this push down right down here. You probably find a little bit of some support right here, and as I mentioned, the 1422, and as well as good if the market wants to push even a little bit lower down towards that 1416. But we've got our support there at 1422. Key daily support there at 1422. Let's go and move into the cable. Now we're starting to see a slip here in the cable also. Support will come in at the 2833. Right in here, we're going to challenge here and potentially drag. And this is on a very short-term basis, but it's going to be 28.23. Now, actually, the cable's actually holding up a little bit better than what you'd expect here that we're seeing here with the euro, which once again is not a surprise. The concern is that Germany may be starting to slide into a recession. We'll go at 28.23 on the cable. And dollar, pretty good, nice little rip here in the dollar. Yeah, we're just now starting to move into a bit of a sell signal on the exponential moving averages on the 30-minute. Resistance is going to be right there at 28.93 on the cable. And moving into the Aussie. Now we did get above here the 72. Well, we had a 72.33 as our resistance here with the Aussie. Actually coming into, and right there we've come up here into the daily, and here's that key daily level here at 72.33. We're just hanging out here at the 72 cents, and we've almost challenged that 72.33 again. Pared back just a bit. That's going to continue to remain resistance here on the Aussie. And here was our support, 71.80. Well, that might be a little bit rich here, even though that is support. I think we may be able to go and push a bit beyond that, as important as the 72.33 areas here. So we're just going to move this a little bit lower, which is going to be 71.66. We've had such a phenomenal run in the Aussie. Trying to look at this on a Fibonacci, it's still going to be a ways down to go down, but we'll be looking at 71.67 for support on the Aussie dollar. And moving into the Kiwi. We got just beyond the 68.23, and you can see right here, that's the 61% why we had that noted, but they actually made a push, a pretty good little push all the way up here to almost right here at 68.50, 68.49 is where, and there was just a little bit more additional resistance right there at the 54. That's where they started to ease back, and they're just above that 61% at 68.27. 23 is what we have with the 61%. The only thing is, well, right here, when you look at this close here, we would just move it this would be the resistance, which would be that close, which would be 68.32. They actually nudged that yesterday, and now we've pushed beyond it, but where the market might be, we'll see how we finish out the day. We could have like a little bit of a mini gravestone doji, but we'll just move it a few pips higher to 68.32 for the resistance on the Kiwi. And support's going to come in right just below that. We're going to move it there to 67.77, 67.77 for a little bit of a pullback. Euro's trying to move a little bit low. Oh, look at the dollar. Pushing once again higher. See if we can't get this euro to move even a little bit lower. We did get down to 14.20, 14.24. And as I mentioned, if you look on here, daily key support, closing support is 14.22. But the door is open that they can move a little bit lower. There might be, I mean, on top, not only the whole issue with the German potential for a German recession, there may be concerns of running into the dollar and the whole Brexit thing. But once again, when we mentioned the Brexit news, anything less than 100 votes is almost going to be considered in a weird way, almost like, I don't want to say a victory, but things won't be as bad. So maybe we can make this move, and we may try and ultimately challenge, since we're looking at the euro, since that's what's moving right now, is looking at it on the 2-hour chart. Here's that 14.16. And potentially move down to that area there to 12. But we have our support here at 14.22. Let's go on and move on now to the dollar CAD. Now, the dollar CAD is extremely oversold, and looking here, this year continues to move lower. Like to see that reaction around that 16 there. And we had bounced up and looked like they may try and, ease back a bit. We've already had we came into some decent support, but although the market is still very oversold. Let's go on and take a look here. With 33.06 and 32.40. Well, there's the 33.06 coming in right there, but the market certainly seems poised that it can potentially move higher here. Let's take a little bit closer look. This 33.14 was barely a pause in the market. Now, I will say this, is that when the market had a chance to rally off of that, it did run out of gas that just above the 33.14. I think we made up to 33.23 or 22. So see if there's something else here. Yeah, that's where. So I'm not so sure how important that 33.14 is, and it's really this 33.06. We're going to go and keep the 33.06 in the short haul, and let's see. With 32.40, we haven't seen that much of a change. And that's going to remain the same, the 32.40. We did make a dip down as low as 32.45. We'll keep the 32.40 still. So no change here in the dollar CAD. 33.06 remains the will remain the resistance. I have to wonder with this euro, because like I said, now I guess on top of with Germany, the concerns there with the possible technical recession, and now with the whole Brexit, I guess once again the glass is going to be perceived as half empty at this point, and really have to hold its own. The 14.22, as I mentioned, is a daily support level, but beyond that we have the 14.16. Let's go and move in now to the Swissy. At least for right now, that 14.22 daily support, you can see we got as low as 14.23 is trying to make a hold here. A nice pop back up in the Swissy. I think they came right into resistance. Yeah, sure enough, we're at 98.50. That's our resistance here. We're looking at here on the 2-hour chart. Right here at 98.51. Until that changes, that's going to be the resistance here. So it's going to be, we had 98.50, so we'll stick with the 98.50. We're right there. And we'll take a look at support at this point. Support on a very short-term basis, and this is short-term, is going to be 98.23. Not very far, but I'm thinking is on any dips, the market won't be looking to looking to go in and buy it back. Won't be looking to try and challenge it. I don't believe so. We're really going to tighten, at least for today. We'll tighten up the support here on the dollar Swiss at 98.23. And the reason that is that we've actually seen this market come off of those lows and now start to break above. So on a very short-term basis, just for today, we're going to move that support level up and see if they can't try and push. If they come back down here, I would look for this 23 area to hold, and then for them to try and make another challenge up in here. Then we'll see what happens after that. Very tight ranges from yesterday, so the analysis isn't straying too far from what we already had before. We're going to move into the dollar yen. Had a smart move up in here in the yen. Look at that, all the way up to 875. Well, certainly this would certainly help it a bit with the dollar having moved even further up in here. So we had our 855, which it held from last week. If you remember on Friday, that was our resistance at 855, and the market rotated down from the 855. And then here we are. We got back, and now we've gone beyond that area here. We'll take a look here. See right here when we challenged this on Friday and we rotated lower, but now we've since popped back up here, and actually the dollar yen has kind of led the charge because the dollar, which had come off those lows, hadn't had the type of rally you'd seen, correspondingly here with the dollar yen. So it was pushed higher. If we're looking on a very short-term basis, this may be splitting hairs, but we'll take a look at it on a fib. So 880 is the 78%. So we almost just about made it there. We made it to 875. We'll put 880 as a resistance here. The 875 is even a bit of a stretch here. And actually, if you look at it, the dollar had rallied and all the dollar yen was already coming off of its highs at this point, but we'll give it the benefit of the doubt if they decide to challenge it. So we'll go with 880, which is a 78%. That seems awfully close, but we'll split the difference here and put the support on a very short-term basis at 838. Now you can already see that this is flipped to a buy mode on the exponential moving averages, and the slow moving average is already coming in at 850, which really would be 25 pips off the lows, but we'll go right here with 838 for support on a very short-term basis. Basically, it's playing out the same way as we mentioned with the dollar yen, with the dollar Swissy. So same thing here. We're breaking higher. Anyway, the short might be pressed a little bit. So if someone came in the short and said, wow, I didn't expect it to move up this high, 875, may look to step in and cover around 838 and say, you know what, I'll reset it onto the challenge. Or if it eventually breaks lower, then I'll go back with it. But right now on the short-term momentum, 30-minute exponential moving averages, they've certainly finally turned the corner here. And I would think that the market will be trying to defend this. And also you would think there'll probably be some support. Despite the safe haven status of the yen, we've already had a pretty good run. At least on a short-term basis, there might be some support on this on pullback, despite the Brexit issue. So we'll go with 839. We'll call it 838. Just playing out the same way as the dollar Swiss, where the dollar Swiss has turned up, so we really tightened up that support, at least for today. We'll see how tomorrow plays out. But I think the markets would be willing to step in and defend that. Let's go into the cash dollar index. Well, we were just talking about this at the beginning of the show, and we mentioned and actually we were there at the time, or was it the 95.65? We'd mentioned how important this was, not from last week, really from the prior week when we saw the bounce off of this 96.65 rally up. We mentioned we thought this was going to be on thin volume, and we did see it would open the market, allow the market to be open for a more defined move lower, which we did. And eventually we broke past this 95.65. Then we came back at the end of this week to find ourselves right back here again. And now we're trying to push this a little bit higher. One of the things we covered in the analysis as we came into Monday, the dollar index closed at the prior week's broken key support level, 95.65. Well, now we're beyond that. The upside challenge target is 96.05, which is a 38% of 95.03 to 97.71, and confluencing with a 2-hour level of 98.08. So let's move back in there. Now, on a short-term basis, I think we had actually had 95.80. We'll take a look here from yesterday. Oh, 95.84. Okay. So we got just above that. We've already had a pretty good little run, and the euro is trying to find its footing. After coming down, we had our support here for the euro before this fall down at 14.22. And we mentioned that's daily closing support. The market stopped at 14.23. I think where we see this 96.05 is if the market gets scared on the vote, the Brexit vote, and they make one more upside move. That being said, the level is actually 96.08. So we'll go with 96.08. We know 96.05 is at 38% of this move. So we'll go with 96.08 for support. I apologize, for resistance. And then once again, just like we talked about the dollar Swissy and even the to a certain extent the dollar yen, the door's open today for them to try and challenge with the market on the bid now. Starting this morning, it only makes sense that that's the direction that the market's going to go with overall. So some of these other pairs will be under pressure. And when we mentioned the dollar Swiss, not that it's under pressure, but the market would come back. They'll probably be looking to defend that. Once we get past Brexit, we'll see what happens after that. But on the short term, we've already seen the move already happen as far as the general direction of the market. I don't think anyone's going to try and fight it ahead of Brexit. So the market's really open for this to go and challenge even higher. And I think that would be the case here with the dollar. As we've already seen this move, obviously the euro has its concerns now. The whole idea, which is really the key news story coming in outside of the Brexit, is the thought that Germany may have potentially slid into a technical recession in this last quarter. Looking for support here on the dollar. Well, we were just at that 95.65, and that's the key area where they're going to come off of. And so let's move this just a hair a little bit lower. It's going to be 95 right there, 95.59, which really isn't saying a whole lot when you think about here on the daily. This is that area when we mentioned here is the market had come down from 2 weeks prior, rallied very strongly, finally was able to break below it, and then rallied back to it on Friday. And then we just kind of hung around there for most of the part yesterday, and now we're pulling back above that. It's going to be 95.59 for the intraday support for the cash dollar index. Moving on to the gold market. Well, we started out the week. We mentioned about it, the market acting a bit tired, but the door was still open for them to move higher. We just needed a catalyst, and that catalyst was either going to come from a dollar faltering to new lows that we put it, or a good move in the equities to move lower. We actually started that way out yesterday, with the equities under pressure, at least the S&Ps. And that opened the door for the gold market. Now, here was Friday's close. And it looked like, okay, now you're going to start to weaken. And we pushed back up to go and challenge, making it all the way up here to 1296. Starting to ease back again. Obviously, certainly something that's not going to be supportive is this upside move in the dollar. And what might have been a catalyst, which would have been the concerns with the Brexit, certainly has not come to fruition as far as being supportive for the gold market. The only thing that what the gold had going for it yesterday, which allowed for us to move higher, was certainly the weaker start to equities, and then we started to find a little bit of footing, and gold has started to rotate lower off that, and certainly with the euro moving lower, that certainly hasn't helped it either. So when we look at where's the resistance, well, we'll look at it on a very short-term basis and keep it fairly tight. We're going to go with 1293 here. Overall, it's still in a bullish mode, even though it looks like it's open for a bit of a respite. As far as support, well, we had 1286. If it goes back to this 1284. Eventually, if we do break, that's really going to open the door for us to come down to 1272. But until it's happened, it hasn't happened. And certainly, we've tried to keep moving a little bit higher. We'll go with 1284 for right now. But I think even on breaks lower, if we were to see it, I think this market you'll look for people to gobble that up. I mean, initially, I think that we could make it down to 1272 and you may see a pretty good demand there in that area. We talked about that if we were to move lower, eventually we could move down to 1257 and there'd be some mad support here in the 1248. I'm not so sure that when we try and break lower, not that we can't and we could hit some stops, you could really eventually, I think probably the worst case you could get would probably eventually be this 1266. I think you'll see a market that could, if we do rotate lower, we'll start to open the door, we'll hit some stops, and maybe we bounce from 72, and then it looks like, okay, people start talking about we're going to move a heck of a lot lower, and then out of the blue sky, you'd probably see this 1266 well defended. This actually was a key area here on the two-hour chart on the way up, that 1266. You can see that right there. You see there? I think the market would, if we do get that pullback, you may find a lot more demand than you would expect in that 1267. So even if the market does break lower, I think you'll see some very good demand on a drop lower. We're going to move into here and move this to 1284. Although gold hasn't moved up to the type of higher levels than we would have thought when S&Ps were first moving lower, or actually after they were first moving lower, well into it. We were talking about a break above the 1257 area if they could get above that. And I said, heck, this should already be 1295 realistic when we see where it's at. Well, although the gold market has been slow to respond to the volatility that we've seen in equities, that being said, it's been resilient in keeping its upside moving. We've talked about this. The only thing you might see a challenge, and let's keep things in perspective, is that one of the things that we've noted here on the weekly is that even if you're looking at the market, I think it's overdone. Each week has been subsequently higher than the other week. That's why you've kept this upside momentum. This would be interesting, though. We closed the week at what, 1280, basically 1287. The next week's high was, prior week's high was 1285. So if you get that move to 12, let's say we get the week to close below 1285, that would open the door for us to move lower. But once again, I think we may find a lot more demand in this 1267 than most people think. At least, if nothing else, I think you could see a pretty good bounce back from that area, and then we'll see what happens after it. But keep this level in mind when you're thinking about the gold. Moving in, let's go into the 30-year bond. No, we had 45.21, and we dipped below that, and obviously the strength in equities or pullback or pop back up in equities or coming off of those lows certainly did go on and help it. So where do we stand right now? On a short-term basis, it's going to be right here at that 38%, the 46.14. I think we moved it up higher, but we're actually going to pull this down to where that 38% is. Well, we did have the 46.14. As far as support, well, let's take a look here. Been as low as 45.08, and it's just going to have to be this previous level right in here, which is going to be, call it right there at 44.31. And let's take a look at the buns. Well, this isn't too much of a surprise in light of the concerns with Germany. So, we'd gotten above the 64.10, and then we lost it, and then came down here. Pretty good moves here. You see in these moves. I mean, boy, you really need to have a pacemaker when you would trade this market. Look how much we'd fallen back, only to rally all the way back, get above the 64.10. Resistance on a short-term basis is going to come in right there. It's 6, and we've actually just challenged it. It's going to come in right there. 64.50, and we just got above it. Support now comes in right there at, I hate to have it that close, but right there, 64.24. 64.24 by 20 ticks away. Still very, very close. Obviously, the breakout 64.10 is key, but on a very short-term basis, that's what we'd be looking at, 64.24. And certainly we've seen this impacted on the DAX. What a big move here in the DAX. This has actually been the resistance, was on the resistance on Thursday, which is the resistance on Friday. And look where they came back to challenge again, 972 before. Boy, this market really has rotated lower from this area here. Resistance on a short-term basis then is going to come in right here at 925. Yeah, that's going to be support for right now on a short-term basis, 769. So that's going to stay the same. You're just hanging around these lows. Once again, as we mentioned, this was the level that we had referenced to the market going to, which is the 1422 on a daily. Right there. And we got down to 1423. That line's a little bit low. Should be low. There you go. So we got down to 1423. We had our support for the Asian analysis at the beginning of the week, stating there was allowed for a challenge of 1422. Well, we've seen it. I mean, it looks like so far it's just off by a pip. But when you look at it on the 2-hour, there's still, once we get past Brexit and the concerns as it could weigh on the euro, it still opens the door. Just below that is the 1416 on the 2-hour chart. You can see that right here. But 1422 is the area they need to go and defend on the daily close. And we've seen that low at 1423. Dollar index, as I mentioned, same thing with the Asian analysis, really opens a door at this point for an upside challenge to 96.08, confluence with 96.05, which is a 38%. If we do, now that the momentum is going with the dollar on the Brexit, they may decide to try and push it. And this is the area where they're going to target them, 96.05, 96.08. Okay, well, that's what we have for the day. Thanks for joining us here on the European crossover webinar. And I'll get that posted in the room. Y'all have a great day.